all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market. This book review is all about The Intelligent Investor by Benjamin Graham. These are the key takeaways from this book. The Intelligent Investor, the best-selling book by economist Benjamin Graham, has made him a revered expert in finance and investments. One of the most significant publications on the subject is The Intelligent Investor, the definitive book on value investing, widely regarded as father of value investing. According to Graham's approach, the investor approach should focus on the actual performance of their firms and the dividends they get rather than keeping track of the shifting market mood. Graham also advocated for an investing approach that provides a margin of safety or room for human error for the investor. Investors should focus on price-value disparities, which occur when a stock's market price is lower than its intrinsic worth. Mr. Market. Graham's famous allegory was that of Mr. Market. This imaginary person, Mr. Market, turns up daily at the stockholder's office, offering to buy or sell his shares at a different price. Sometimes the proposed prices make sense, but other times, the suggested fees are off the mark, given current economic realities. Value investing derives the intrinsic value of a joint stock independent of its market price. Analyzing a company's assets, earnings, and dividend payouts can help identify the inherent value of a reserve, which can then be compared to its market price. If the intrinsic value is more than the market value, in other words, the stock is undervalued in the market, the investor should buy and hold until a mean reversion occurs. Margin of safety. Graham also advocated for an investing approach that provides a margin of safety, or room for human error, for the investor. There are several ways to accomplish this, but buying undervalued or out-of-favor stocks is the most important. The irrationality of investors, the inability to predict the future, and the stock market fluctuations can provide a margin of safety for investors. Dividend stocks. Many of Graham's investment principles are timeless, they remain as relevant today as they were when he penned them. Graham criticized corporations for their obscure and irregular methods of financial reporting that made it difficult for investors to get an accurate picture of the health of a company. Graham would later write a book about interpreting financial statements, from balance sheets and income and expense reports to financial ratios. The Intelligent Investor is widely considered the definitive text on value investing. According to Graham, investors should analyze a company's financial reports and operations but ignore the market noise. The whims of investors, their greed and fear, create this noise and fuel daily market sentiments. Most importantly, investors should look for price-value discrepancies, when the market price of a stock is less than its intrinsic value. When these opportunities are identified, investors should make a purchase. Once the market price and the inherent value are aligned, investors should sell. How do I become an intelligent investor? Anyone who wants to become a successful investor should adhere to the twin concepts of patience and value, according to Benjamin Graham. You must be willing to conduct the necessary study in order to ascertain a company's genuine worth. After purchasing stock in a firm, you must next be willing to wait until the market understands it is undervaluing it and raises the price. That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also, follow our Facebook page to learn more about the stock market.